Welcome back to Liberty and Finance. We're delighted to have this weekly market update with Miles Franklin, CEO, Andy Schectman. We are live streaming this live. So everybody who often gets a little bit confused on our Tuesday night weekly market updates that are typically taped on Tuesday afternoons and tries to submit questions during the live chat, don't feel confused tonight. Go ahead and submit your questions during this live chat because we are actually live with Andy Schectman. We also have my son and co-host, Elijah K. Johnson, with us here. Guys, thanks for coming back on Liberty and Finance, both of you.
Good to see you both.
Great to speak to you, Dunnigan and Indy.
And Elijah is also the technical brains behind our ability to do live streaming. There's several moving parts that have to come together to make that happen. I'm always grateful for his technical prowess at that. And Andy, we just wanted to regroup with you as we often do and get your insider's view of the dynamics you're seeing in the major factors that are affecting not only our world and finances, but zeroing in then specifically on the retail supply chain that brings us to bullion that's available for investors. But I guess before we get into that, just from a real macro view real quickly, you brought up on this show about 3 or more weeks ago, maybe it was 4 weeks ago, some cyber warfare exercises that were some war games that were being role played and scenario played at a very high level of elite involved players from the government and major corporations and so on. And just this week, we've had this big out on all the channels, all the major news channels are reporting that there's a heightened risk of cyber attack from Russia if the U.S. should take any action, against Russian interests, et cetera, regarding Ukraine. Do you have any further insights or thoughts about this, or it's just another one of those? What's next? You've always warned us about. It's like all it's going to take is one event. You said one more event, just one event, and it could come from any direction. Is this an example of one of those events, or what are your latest thoughts on this particular one that you brought up here about a month ago?
I mean, I don't think you have to go any further than Jay Powell being asked what was the biggest threat to the U.S. financial system or the global financial system, and he said it is a hack. It is some sort of a global hacking event or a global computer cyber problem. And when you see 11 countries from around the world get together, when you see Klaus Schwab and the World Bank, when you see the IMF and the BIS, when you see a concerted effort, the same group of people, really the same group of actors that held a meeting on global pandemics and viruses in 2019, it makes you go, and you have to wonder a little bit. I think they're conditioning us. It seems like so many of the things that happen nowadays is almost a form of conditioning where little by little things continue to happen and they give us crumbs of insight into it. And by the time it happens, no one is surprised. Sort of like when everyone says, well, this cerveza sickness will go on forever. It'll just be a news strain and a news strain and a news strain. When the president comes out and says, well, we've funded a new testing facility that will produce testing strips, and it'll be done in 3 years. What does that tell you? I mean, in 3 years, they'll be able to roll out enough tests to test for coronavirus, to protect us forever. The point of it is it's more and more conditioning. And I think that's just emblematic of it, to think in a world that is so highly digital and so sophisticated that you're not going to have problems with cyber problems, I think is naive. And you just look at how sophisticated even cryptocurrencies have become, and the whole edifice of everything that we do now tied to our cell phone and the internet and computers. And yeah, I think it's very plausible. And this is one of the reasons that I've resisted for so long to do things old school. And I know at some point I have to transition and be a little bit more with the 21st century, but suffice it to say, yeah, I think it is something that people should really be concerned about, because all of our wealth for most people are digits on a screen. And you see a problem, an electromagnetic pulse as an example that blows up the internet, blows up the electrical grid. you have problem. You have problem accessing your funds. If everything that you have is digital or a credit card, if you don't have cash in the bank or silver to barter with, I'm talking cash at home rather, excuse me, or silver to barter with, or something to trade with, what do you have in that type of event? And when you get the Fed chairman in the midst of the greatest inflation in 40 years coming out and saying, hey, the biggest threat to this system is a cyber threat, I think people should really take note and pay attention to what he's having to say.
One thing I was going to ask Andy, you mentioned how we are, that we really need silver to barter with. You mentioned, and probably cash as well. A lot of people who call and ask that question, what is the best to have in a worst case scenario? It seems like, a lot of people are looking towards US minted products like the Silver Eagles and the junk silver. I know those have higher premiums right now, but your perspective on having just at least a little bit of those just to barter with in a worst case scenario or a cyber attack that we might have in the near future.
There's no question people really, really, truly are awestruck by the old Morgan silver dollars and the peace dollars first and foremost. They might be the best thing to barter with. I live in a golf community, and I give Morgan silver dollars to some of my friends here to use as ball markers, and every one of them universally are blown away by it. It's a great conversation starter. And I think when you talk about the comments that I get when people get these, they're crazy. People come up to me, when do I get one of those coins that I saw he had? And they get noticed. And I think the wow factor is important. The wow factor is important when you're talking about bartering. Now, the traditional answer is pre-65 junk silver, dimes and quarters. It lacks the wow factor in a big way. Dimes and quarters that look really not too far different than everything we've held in our pocket for all these years. And I say too far different. Yeah, they look the same, but they don't sound the same. And often when they're 50, 60 years old, they're worn. It is certainly going to provide the most utility to trade with. But again, I think it lacks the wow factor. The Silver Eagle, the Morgan silver dollar, the Peace silver dollar, for my money, would be the very, very best way to go. Now, the only problem with the Silver Eagle, as we've talked about ad nauseum, the U.S. Mint has been the model of inefficiency all year, or really for 2 years. And, even speaking about one of the specials we're offering today, Silver Eagles at just over $8 an ounce, that's almost 3 times higher. I take that back, almost 4 times higher than any time I've ever sold them in the past 30 years, with the exception of the last 2. Is this a new reality? I'm not sure. Now, there are some people out there that I respect an awful lot who believe and have been told by people that they respect that are high up, evidently, that there will be 2 resets. There will be a reset that is man-made, and there will be then a reset when that all fails, that is Mother Nature. And when that second reset comes, this person was told, and this obviously comes from someone way high up, says that anything that's not American will be confiscated. Now, I don't know that I believe that, but the person who told me this is someone I respect immeasurably. And all I can tell you is simply this, is that there's something to be said for having some American Eagles, some Morgan and silver dollars, and, junk silver. I'm not going to disparage it. If you can get the older, like the Mercury silver dimes, they will inspire a little bit more interest when people see them. The truth of the matter is, I've sold $1 million worth of junk silver to people who can't tell me how much silver is in a dime or a quarter, and that's a problem. And so I think if I had my choices, it would be the ones that I mentioned. If I had junk silver, I certainly wouldn't trade it in for something else, because it will give you the greatest utility, and that information will disseminate to the public eventually. And look, if we see S&P, which just had its worst 16 days to start a year in history, continue to fall down that road, I think more and more people will start to understand silver, and information like how much silver is in the silver dime or in the silver quarter will become mainstream. We're a long ways away from that. So in that environment, having something that people will look at and say, wow, that's amazing, not a bad idea.
Yeah, I wanted to echo your comments about Mercury dimes being standouts in that small size form factor. And I think you can have those at a lower premium per ounce of silver than some of the silver dollars. I completely agree about the wow factor for the silver dollars, but a lot of those are in the mid 30s or up for the silver dollars, whereas the mercury dimes can be had for slightly more than normal random junk silver. So that's one thing for people to keep in mind. And we've had people ask us this question. You've answered it before, and there's no perfect answer. But when they ask how much junk silver is enough for an average family member, what guidelines or thought processes do you give them?
It's a good question. I mean, I used to answer that question never believing that the US dollar would ever implode, where the markets would really implode, that it was always talking about having it as a hedge. And I think the answer usually was a half a bag of silver per family member, $500 face value per family member. But look, in an environment where, we've talked about recently, done again on your show quite a bit, we talked about how 50% of every dollar ever printed had been done in the last 20 months. Well, that's been changed now. And in reading something earlier this morning, I read that since January 2020, nearly 80% of all dollars in existence have been printed since January 2020. You're talking massive inflation. And I think, the question is, what's too much in an environment where the currency is disintegrating in value, where the Fed is caught between a rock and a hard place, where tails you lose, heads you lose, whichever choice they make, whether it be to defend the dollar or the markets, are going to create a big problem in this economy eventually. And so how much silver is too much? Now, as it pertains to pre-65 junk silver, it used to be the least expensive way to buy silver. It's not anymore. It's gotten to be very expensive. And that's emblematic of two things. One, a lot of people understand the significance of having something that offers utility. Two, it is emblematic of the fact that in a market like this, no one wants to go back into fiat. No one is selling. This hasn't been made since 1964. To find it is becoming really, really hard, because no one is calling us and saying, hey, I want to sell some junk silver. So I think normally I would say, this is the most conservative way to buy it. Right now, however, it's the most expensive way to buy silver, with the exception of the silver dollars and silver eagles. So I would think twice. I would simply say people should look at silver for the amazing value that it offers, own some of the smaller pieces like junk silver or silver dollars for the utility that they offer. You hear me say silver dollars, they're not a full ounce. Silver dollars are roughly 0.77 of an ounce. The dimes and the quarters are a dollar's face value is 0.715 ounces of pure silver. So if you take 14 dimes and multiply it by times 0.0715, you almost get exactly 1 ounce. And the argument for owning the junk silver is simply this. 1 silver eagle or 1 silver dollar gives you 1 transaction. 10 dimes is almost the exact same thing as a silver eagle, or 14 dimes, almost the exact same thing as a silver eagle, and potentially gives you 14 transactions. Now, let's hope things don't get that bad where we're actually trading dimes for bartering for goods or services. But if anything that we've learned over the last couple of years, things can happen that we're not really expecting to happen. And when you take a real close look at what's going on with the dollar and the markets and the predicament that the Fed has got themselves in with interest rates where they are, and the rhetoric saying they're going to get tough on inflation, but conventional wisdom saying probably not, I think we should be open to lots of possible alternatives, whether it's a cyber event or whether it's a transition to a digital currency. I just read the other day that almost 2,500 bank branches have closed in the last year. Wells Fargo just closed a huge number, and that's on the heels of them closing their lines of credit. It just seems like maybe they're getting ready for a bank run or a cashless society. I don't know, but I think it's never been more important to own gold and silver as wealth, not as a speculative investment. And when you talk about speculation, I mean, buying silver at under half of its 1980 value, there are very few things on the planet, maybe sugar, with the exception, that are trading below what they were in 1980. It's not only a supreme value, it's disappearing in nature. It has massive utilities that are expanding, and the dollar is crumbling, and the Fed has got to do something, put up or shut up. And either they defend the markets and we see interest rates rise, and markets really take it on the chin, or they do what all the previous administrations have done, and they will sacrifice the dollar in favor of the markets. Never been a better time to own gold and silver, and never a more important time to think about these what ifs. And I think, as we've talked about so many times, then again, the genesis of your show, Reluctant Preppers, it's being prepared, and even reluctantly, you have to realize, even the most ardent bulls have to realize that we're on the precipice of some major change, and whatever that change looks like is debatable. How much pain we have to go through is debatable, but just reading the December Fed minutes from their meeting leads me to believe that there's going to be Mother Nature will get her pound of flesh at some point somehow, and things will correct. And when that does happen, I think owning precious metals will take a far more significant meaning than it does to most people right now.
Another question that we've had from more and more people in this era of, as James Rawls from survivalblog.com calls it, living in the age of deception and betrayal. A lot of people are concerned about many aspects of not only the banking system and all that. That's why they're watching this channel, for evaluating different risks that may exist in their lives to their families. But when they're looking at owning precious metals, they're thinking about where's a safe place to store them and how they're planning on using them. We've talked with you in the past about the options of self-storage versus vault storage, that sort of thing. Do you see any changes coming? There's lots of changes going on. You mentioned, for example, bank branches closing, people using checkbooks less. There's all kinds of things going on, people using cash less. Do you see things changing in the precious metals storage arena that people should think forward about if they're looking into a time of more civil unrest, less perhaps trust of the government? There was just some comments in the stream about the government is sort of revealing its hand and no longer being, standing up for the people, but kind of seeing what they can get from the people. So do you see any changes coming in the arena of storage that we should be aware of, or people should be thinking about?
Well, I listened to Rick Rule when you interviewed him. I always listen to everything Rick says, and amazes me how good of a speaker he is and the thoughts that he has. And a lot of the thoughts he has, I think of myself, but he just says it so much nicer. One of the things he talked about with you was storing with a company that has a big balance sheet, or is a publicly traded company like Brinks. And because you don't want to be somewhere, I think, where like a bank or a small storage facility or a place where you rent a box, where you use a retina scan to get in. There are places like that all over the place. Because I think, as most likely, if the Fed tries to get tough with inflation, you'll see interest rates rise. You'll see a lot of counterparty risk. That's hugely deflationary as asset prices start to find equilibrium, as rates rise, as things get far tougher on the economy. And I think counterparty risk in that environment becomes really front and center. So storing, if you have to store with a company like Brinks, is a Fortune 100 company, a massive company. Our Brinks program is something I'm very proud of, and the exclusives that we've been given through Brinks is something that would come to mind. Look, there's no better place to hold it than under your thumb. Hide it, get creative, become a midnight gardener, bury it in your backyard. Go get some empty paint cans and splash some paint on the outside of them that you can buy at Home Depot. Fill it with your gold and silver and put it in your basement or your attic with your other half-empty paint cans. Open up a piece of sheetrock and put it, behind the sheetrock and mud it, tape it. Get creative and be your own bank. Be your own 401k. Talking about things I see changing in storage. One thing that really we need to mention, because I still am getting emails from people asking me, well, can I do this? The IRS ruled against a customer, or a couple, who had a solo 401k IRA and was holding their own precious metals on behalf of their self-directed solo 401k IRA, or LLC IRA. These are often offered through companies like Checkbook IRA, Passport IRA, Perpetual Assets. These are fine companies, but the rules have been changed. And basically what was said is that you can't hold it yourself any longer inside of a self-directed IRA if it's an LLC or a solo 401k, you are asking for big, big trouble. In fact, this couple had purchased 800,000 worth of gold eagles, took possession of it, as a lot of people have talked to me about, and I've been consistent for years saying, do not do it. The IRS does not like this loophole. They scrutinize it. I've always been told they scrutinize it. Well, now the IRS ruled that taking possession of that metal was a taxable event. So that's the only time. Now they have penalties and taxes they need to pay. And that's the only time you don't want to hold it yourself, where you would definitely want to use a third-party storage facility. But I would never store it in a safe deposit box. I would never store it in a third-rate storage facility. I would look to a big company like Rick says, with a big balance sheet, a public company like Brinks or Loomis. And if I had to, and if not, I would be my own depository. It's different for someone like myself who's out here front and center talking to people who owns a gold company. I have to use third-party storage. But for people out there who are accumulating gold and silver and no one knows about it, just hide it. Don't tell people about it, and put it away under your thumb. Now I'm going to mention one other thing. Someone who's very close to me, and I've done this once before, and he got a little angry with me, so I'm not going to mention who it is. But someone very close to me owned a whole bunch of silver and had it in a safe, and his entire house burnt down to the ground. And the only thing that was left was the safe and the molten, melted silver eagles that were inside that safe. And as heaven is my witness, he sent them to me, several thousand of them. I'd open up the top and pound them on the table, and they would come out in a big clump. They were green. We melted them down. He got 99% of the value of the melt value after we pulled out the impurities. The point of it is that everything he owned was gone, and the only thing that was left was the one safe with the melted silver. So yeah, that can happen, but I think you have a far greater chance of being ripped off by the system than you do by a fire, or God forbid, a burglar. And that would lead me to say one other thing. If you do store stuff at home, hide it in multiple places. Don't put it all in one place. Have a decoy safe, a little safe that you could lead someone to with a bigger safe hidden somewhere. Get creative. Think outside the box and be your own depository. I think that's the best way to proceed. But if not, our Brinks program is, I believe, the finest in the industry. That can be found at preciousmetalstorage.net. That's preciousmetalstorage.net. And our safe deposit box program, another exclusive we have with Brinks only in Canada, is privatesafedepositboxes.net. So sorry to be so long-winded, but it's an important question.
Actually, just to set your mind at ease about that, in the chat stream, several of the people said, wow, Andy's been thinking about this for some time, because I think they can see that the fluidity with which you're able to speak about this shows that you really have put a lot of thought to it. You've talked through scenarios with many different people. And it's something, this is frankly part of awareness and preparedness. For years on our channel as Reluctant Preppers, we've talked with experts such as Brad Harris from Full Spectrum Survival and others, Jerry Robinson from who was author of The Bankruptcy of Our Nation and so on. And they talked about how you have to do thought experiments, and you need you need to think through scenarios, and not just what your preferred scenario would be. Good old, was it Mike Tyson's quote, everybody has a plan until they get punched in the face?
Punch in the nose, yeah.
Yeah, so it's not just what I want my plan to be, but what might happen if this occurs, or what might happen if that occurs, and think through these scenarios. Shoot, I remember, and probably those people in the chat will remember, when we were kids in grade school, and they were talking to us about, if there's a fire in your house, here's your things you got to do, steps 1, 2, and 3 for safe. Make sure that, you go through these, have a plan with your family, talk it through ahead of time. Where were you going to meet up? If you can't communicate with each other, what should you assume? Elijah and I have had conversations around that. We've had it with our kids for years, is if communication got difficult, or if we lost our cell phone connection that we all rely on all the time, what is your plan B, C, and D? So that kind of thinking through, doing thought experiments and talking through scenarios is invaluable at coming up with sort of battle testing your plans, and coming up with a diversity of plans that can withstand better than just your one and only plan. So that's
for sure. And the easy way, baseball was my entire life, even playing softball all around North America into my 40s. It meant everything to me. And there was always one thing that you would say to yourself if you were an infielder or an outfielder: what am I doing if the ball's hit to me? Look at the situation and what am I doing? And if you're not ready or prepared and can be reactive, when the time comes, your hesitation kills and you get hit in the face with the ball. So, or you miss the play that you should have made. And the same thing is true in life and investing. Think it through. And we are at a point in time where these things are happening, and the reaction to the things that have already happened are guaranteeing with a greater certainty that these things will happen to some degree. And the market will collapse at some point. I think everyone knows that. There'll be a debt problem as the massive amount of debt unwinds, and the stock markets will collapse. What will happen? What will happen if? And I think for people not to think this through, to take the steps to be prepared, but not think of what or how or what if is a vital part of the equation. So yeah, I couldn't agree more. Good question.
Thank you. In the live chat, somebody reminded me I didn't have my microphone out. So there we go. Hope that helps.
Yeah, now it is.
So we have a question actually from viewer Rob is wanting to know about high energy costs and if it's impacting the mints. I know we've had you on this show, Andy, so much talking about the problems that mints have been having around the world since COVID started with production, with shipping and everything like that, and how inventory has been very, very low compared to years past. So has energy costs in particular been an issue?
I think it's been an issue with the mines more than anything. And, the mines are just one step in the process. The mines have to get the metal out of the ground, and that costs more with higher energy costs, and refining it costs more, and then getting it to the mints to produce it. And, it's a large supply chain issue where the problems are that's just one piece of the puzzle. I don't think the energy problem or the increase in energy is affecting the mints as much as it is the mines and getting the gold and silver in refined form to the mints to be made, and then from there the mints to get it out. Look at the Austrian mint. Their problem had nothing to do with high energy costs. We haven't seen anything from them in weeks and weeks and weeks. They got hit with Omicron. Look at the UK mint. Their problem wasn't with energy costs. They ran out of silver blanks. Look at the US mint. They say everything's fine, yet they're the model of inefficiency. Look at the Canadian mint. They're hardly producing anything. I've been the little boy who cries wolf on this channel talking about supply chain problems for the last year and a half. And I will tell you, it is worse today than it's been for sure since I started talking with you, Dunnigan. Not even close. It is getting harder and harder and harder and harder and harder to get product. And I don't think we've seen anything yet. And the high energy costs are just one piece of the puzzle. But I would say it starts at the very top of pulling it out of the ground, less the refining or the minting rather. That's just an issue of far more demand than there is supply, and inefficiency in getting it from the mints to the end user, of course, with the backlog of shipping containers and the trucks. We had a whole bunch of silver at one point go from we finally got it in after it being a few days late. Finally made it into port, only to have Brinks drivers drive it halfway and quit and park it in a Brinks facility in Salt Lake City on its way to our warehouse in North Dakota. For 6 days it sat there. So there's all sorts of disruptions, and I would put the high energy costs only disrupting the mining, less anything else along the way, except I suppose you could say, I've been told that UPS and FedEx and the Postal Service are all going to raise their rates here in 2022. So it's all getting more and more costly, but I don't think that really has much to do with the inefficiency we're seeing at all, quite frankly.
As we've spoken with multiple miners and royalty companies, they talked about how the rising cost, not only of energy, but of labor and of repairs and of parts and that sort of thing, are hitting miners in many different ways. And therefore, when we've talked for years about silver selling below the cost, all-in cost of production, which was true for a lot of like 2015 around that time, now that cost of production is rising significantly because of the cost of all of these things. And that's going to be impacting the all-in cost of mining silver going forward. So that's another thing that's a drumbeat of fundamentals affecting, supply and demand, as we've been told about the financial picture of silver. We had a question.
For sure. No, for sure. I completely agree. And I don't see it getting really much better anytime soon. And if you see a war breakout, in Russia and Ukraine, it'll only exacerbate as energy costs will probably rise and tensions rise, and everything is already in a bad position. So you don't want to see more and more issues with rising energy costs, which are probably on the horizon. As I'm convinced the Fed will not follow through with defending defending inflation, protecting the dollar. They're going to sacrifice it, and they'll reverse course as soon as the markets start to throw up, and you'll just see higher and higher costs in energy and everything else associated with pulling the metal out of the ground, getting it to the end user.
Andy, there's a question specifically that you would have access to in the retail chain, and that is, have you had any uptick in package theft? I've had it says, this was Fantanarana. It says, I've had a $5 bill stolen from a greeting card in the mail. I have no idea how they knew it was inside the envelope. So, for example, our packages are white labeled. There's nothing on the outside to attract any attention. We don't inform the shipper of the full value, et cetera, et cetera. Have we had any uptick in package theft?
Well, we've had more packages stolen in the past 2 years than I did in the previous 30. And that has a large part to do with the laziness of some of the UPS drivers, flat out. When COVID started, they stopped using the signature, and it was adult verification. So they would ring your doorbell and say, is Mr. Kaiser here? And if Elijah answered, they'd say, are you 18? Or yes, of course you are. And your dad's not here, but you can sign it on his behalf. And they would acknowledge that an adult at the location, 18 or older, signed for it. Instead, what they've been doing is leaving it in the driveway or on the doorstep and just saying, yep, saw him. But in many cases, that's not the case. I've had them left at other people's houses and other people's porches and whatnot. And this is a driver derelicting his responsibility. Now, it's my understanding that we're going back to the signature guarantee from UPS, but COVID has provided an excuse for some of these drivers to not finish their responsibility. And, part of it is also the way in which we send things. So I guess I should make that clear. When we send a package to someone that's $20,000, we'll insure it for $200 through UPS. And that takes it out of the Amazon stream with no identifying markings on it whatsoever. If you got 20 grand in gold, it's going to be in a box this big. And it's not heavy, 20 grand in gold, 10 ounces. It's just over a half a pound. It's not heavy, and it's insured for $200. So, someone's not going to think there's anything inordinately expensive in there, right? That $200 insurance takes it out of the Amazon stream. But the $9,800 that we put on it supplementally through Travelers or Lloyd's or whichever policy we use allows the recipient to have anonymity, so that the driver doesn't say, geez, what do you got in here? A box of gold. So, the drivers really don't think it's anything outrageously expensive. So maybe that's why they're doing it. I will choose that method over insuring it wholly through UPS, simply because I think people's anonymity when receiving high value packages is probably a little bit better. More often than not, look, I don't want to paint a picture that we're having thefts. 99.8% or 9% of the packages make it. I used to get up on stage and say, we've never had a package lost in 25 years. Well, in the last couple of years, I bet we've had 10, and they've all, either been resolved through investigation or insurance covered it. And it's all been because of the policy changes related to the pandemic. So good question. Something we really strive to mitigate. We do the very best we can, but when it leaves our warehouse, we're kind of at the mercy of the carrier at that point. But it's a fair question.
And I think a thing to note is if people are concerned about that, they can always request it to be sent to a UPS customer care center, and they can pick
Yep.
it up there. And as you mentioned, USPS registered and insured mail. It does, the insurance is with USPS, but that is a way to guarantee a signature. So those two options are also available for people.
They are. And everything is insured, so it's not really something to worry too much about, but it is a fair question and something that's been aggravating, I guess, on a semi repetitive basis. And even if things haven't been lost, there's 1 out of every 50 transactions the driver is not following through. And I get a phone call saying, hey, I found this on my porch, I didn't sign for it. Well, I tell them, call your hub immediately and complain and say your shotgun shells that you ordered were left on your doorstep. And then we file a complaint at the same time with UPS corporate. That's the only thing we can do. We remedy it on a large scale. The client narrows it down and calls the manager of the hub and says this is unacceptable. And that usually remedies the situation moving forward.
Andy, there's another question that was asked in the live stream. Michael Favel says, one more smash down in silver. And I know you're not a market prognosticator to predict for people whether or not. I'm sure clients call you every day and ask you that question. Is it going up or going down tomorrow? We can't provide people that answer. But in general, when you've seen, we've talked about people who are concerned about the choppiness in the overall stock markets, and how usually when stock markets take a dive, it drags down a lot of other things with it, other assets with it, at least temporarily. And then could you talk to us about the dynamics in the retail precious metals market when that happens, because it has happened in the past? What happens to the availability and the premiums? So actually the selling price of physical silver at times when there is an overall market meltdown and the spot price does drop precipitously.
The narrative is that there's a rush to liquidity. That's what we're always told. The good gets thrown out with the bad. It's a rush to liquidity, and that's crap. No one sells a drop when that happens. And yeah, maybe there's a little bit of it going on, and there's an unwinding of margin debt, which is at all-time record highs, no question about it. And so some of that debt has to be sold off. But look, some of the assets need to be sold off to cover margin debt or to cover indebtedness. But I don't believe that. I think it's the 4 banks that are holding down the price of gold and silver want to delink the rationale that the rest of us have to running to it. There will come a time when silver will be the most important asset to own, and maybe it's already here. There are no commodities out there. There are no assets out there that offer the duality in demand that silver does, industrially and monetarily, that is priced the way that it is and exhibiting the supply-demand really disparity, the dichotomy between an asset that is depleting in nature and is massively needed in industry and as I've said before, has gone through a wicked renaissance in monetary demand. Every box that you would check, you would do so for silver. And, you listen to the money managers. A guy that lives across the street from me here is one of the most successful money managers in Southern Florida. Has over $1 billion under management. Went to dinner with him. And I wanted to talk to him. I didn't want to tell him anything about what I did. I kind of sat in the weeds and just asked him questions. And basically, I said to him, aren't you afraid, with what's going on with interest rates and the potential that could have for the market? And he said, I'll do what I've done for the last decade, and I'll buy the dips. And if it goes down, I'll double down again, and I'll keep buying. And it's worked for the markets. It's worked for the past decade plus, thanks to the Fed. But I would argue when you look at the fundamentals behind silver, buying the dips, if you're fortunate enough to find that dip, buy it. And, to your point, Dunnigan, and you've been through a few of these with me now just in the last year plus, where every time we see the price of silver fall, the premiums escalate almost immediately commensurate with the drop. You don't have to go back any further than to March of 2020 when silver was $12. You couldn't find an ounce for under 20 to save your life. And the delays were off the charts. And I can promise you there was nobody selling anything. Nobody. And this is when the market melted down in a few days by 40%. So the banks that are rigging the markets, rigging all the markets, there are no free markets anymore, just manipulations. And those banks, well, they don't want people to say, see, I knew it, and sell everything they have and run to gold and silver. That is wholly unproductive for them. And at some point, these banks will just give up. So could there be another pullback? Yeah. I mean, I would be stupid to not think so. We've been conditioned to believe so. But one of these days, it won't. It will keep running. One of these days, these banks will be positioned suffice to let it run, and the switch will be flipped. When that happens, we don't know. Will we grow old waiting for it? I hope not. But you know the old saying, be careful what you wish for. I'm excited for the prospect of what this year means for the price of gold and silver. I am not excited to witness it in an environment where everyone I love and care about is suffering based upon what's going on with the dollar or the markets or employment or a myriad of other things. So yeah, maybe, but ultimately there isn't a better place to put your money on the planet. And if I had a gun to my head, I would say that was my last dying breath. There isn't a better place to ultimately put it based upon every fundamental that I can run through my head. I just don't see how it doesn't ultimately play out to much, much higher prices in silver and much, much more difficulty, both on retail and wholesale level, getting silver.
I got another hot potato question for you on the live chat stream. The reason it's a hot potato is because we're a business and he's asking about another business, but let's just consider the principles involved and see if we can come at it from a principled standpoint. Jay Hebert says, is the Delaware Depository safe and reliable for holding our precious metals for our IRA accounts? What considerations should people who are looking at different depositories, what questions should they ask? If they want to do some research on their own, what kinds of things, what kind of concerns should they be looking for?
Wow, that's a tough one. Let me try to be political here. I don't believe that you raise yourself by bringing others down. I don't. We have a great storage program with Brinks. I've talked about the virtues of the Dakota Depository for a long time. Personally, I've had issues with the Delaware Depository myself over the years. I don't want to say they're a bad company. They're not a bad company, but as it pertains to IRAs, I will say there is one thing that makes me not want to use Delaware Depository for IRAs. And that is the fact that when it comes to segregated versus allocated. Okay, so a storage account should be allocated and segregated, not just allocated to the IRA program or to a particular custodian, but it should be segregated within that allocation to Dunnigan Ties, to Elijah. It should not be just pooled within an allocated framework. So what I'm getting at is this, is that in an IRA, Delaware Depository does not segregate silver within the IRA. Now, if you give them 5,000 Silver Eagles, you're going to get 5,000 Silver Eagles back. But the chances of you getting the same Silver Eagles that you gave them are pretty much slim to none. For sure, on things like 100-ounce bars or rounds, you're not going to get the same stuff back. And that's a problem to me. I don't want to hold anything at a depository if it is not 100% segregated, allocated if it needs to be to a particular program like the Miles Franklin program. But within our Miles Franklin storage program, which, you know, Brinks or Loomis or any of these big companies, they don't want to deal with you. They want to deal with me, one company, and everything underneath it. We do the vetting. So if you have a storage account in our Brinks program, it is 100% allocated sub-account, segregated and allocated sub-account, allocated to the Miles Franklin program, segregated to you within that program. And that's really important because inside of an IRA, the key to the precious metals IRA, the number one biggest reason to own a precious metals IRA, in my mind, is the ability to take possession of the metal through distribution. So when you cash out an IRA, there are two ways to do it. You can liquidate it, say, give me all my money, or you can take a distribution where it's a portion of the money. It's a pie cut into pieces all the way through the crust, which is the initial amount, and all of the interest on top. You take that whole slice, 1/10 or 1/4 or 1/2, whatever. You take distributions or liquidations. Well, in a precious metals IRA, you can take said liquidation or distribution in kind, meaning give me my metal. I'll pay the taxes as if it was a cash distribution, but I'll take it in the metal you are holding for me. And in that environment, you damn well want the stuff that you paid for, especially nowadays. We're buying 2021 Type 2 Silver Eagles, or even better, 2021 Type 1 Silver Eagles, or the San Francisco Mint box that people are holding. You want that box back. You don't want something else. Well, you got Silver Eagles. No, I bought the San Francisco Silver Eagles, which are more valuable. And that's the issue that Delaware Depository does not do within their IRAs. Now, I believe they segregate gold in the IRA,
Yeah,
but
it's
not
just
silver.
Yep.
Right. And that's a big deal. Now, if you're an account with them outside of the IRA, I believe they will segregate for you. And that's a big difference. Bottom line is simply this. I won't speak to their balance sheet or their credit worthiness. They're a big company. And I think they're a COMEX depository. They're the real deal. But I would just simply say that if you are going to have stuff, especially in an IRA or anywhere, damn well better be segregated with your name on it and not just allocated to the program, which means you'll get your ounces back, just maybe not the ounces that you put in there. And that can be a big deal, especially if the ounces that you get back are not in the same quality or condition that what you put in. And I've seen that. And I've seen that with Delaware Depository in IRAs personally. And so it's my personal opinion that I don't like using them for IRAs, but if someone were going to have a segregated account within, non-traditional funds, not non-traditional, what am I trying to say? Non-qualified. So that's just cash. You write out a check, you buy metal, you store it at Delaware Depository. If it's segregated in your name, you're fine. Just don't ever store anything through any program unless it's 100% segregated to you, not just allocated to the program. Big deal, big difference.
Thanks for that thorough answer. Elijah, any other questions jumping out at you from the live chat?
I think one was more of a comment that they said that they've been having a hard time finding like vintage 5 ounce, 10 ounce, and 100 ounce silver bars. And it kind of is a testament to how no one is selling back right now. If you could maybe speak to that, are we seeing a lot of, it seems like a lot of the products that we have are just brand new, right? It's not like people are selling back old product, and we have a lot of that right now. If you could speak to that.
Which speaks to the fragility of the whole market. That's what I've been trying to say to people. This is why I say what I say, because everything is normal until it's not. And, I talked about how in 2008, everything disappeared completely and totally. When the price of silver went from 21 to 9 and gold went from 1,000 to 700, you would think the whole world was dumping gold and silver bars all over the universe. And in reality, it was all paper smash, drive-by shooting by the big four commercial banks. And every major mint in the world was sold out of product. US, Canada, Austria, Australia, South Africa, United Kingdom, every refinery, all of it gone. You couldn't find nothing for months. And so when you talk about vintage anything, yeah, good luck finding vintage anything. No one is selling. No one wants to go back into dollars and wonder, what am I going to do with that money now? Unless they have to. And you're right, everything is brand new. And so right now we have a situation where the Austrian and the United Kingdom mint are really not delivering for various reasons. The US and the Canadian mint are taxed beyond belief and are inefficient. So you got the South African mint and the Perth mint. Well, ask John Adams what he thinks about the Perth mint. I mean, it's all very, very fragile. And so, yeah, you're not going to find anything other than brand new stuff. And if you do, it's in dribs and in drabs. This is the plight that the coin shops, the local coin shops are faced. They're all going to go belly up. I hate to say that, but if they can't get stuff and they're way down on the food chain and they don't hedge, so they can't take a big position and hedge their risk, and they only buy what people are bringing in, well, good luck. No one's bringing anything in unless they're forced to. These people will just have a brick and mortar and expenses and salaries and electric bills and all that kind of stuff and no product to sell. That's what will happen. And I think that's what, again, this is just like junk silver. You can't find it because no one's selling it. Well, it hasn't been made since 1964. Good luck. When you talk about vintage bars like the old Johnson Matthey and Engelhard bars or the old Royal Canadian Mint bars, they're awesome. You see them once in a blue moon these days. Things we take for granted. you know, the old saying, you never really miss it until it's gone. Well, that's the case with a lot of this stuff that sat on our shelves forever because no one wanted the vintage. They wanted the pretty ones. Well, can't find the vintage anymore, and the pretty ones come in and they go. So yeah, I think that's the way it'll be, and I don't see that changing anytime soon either.
One of the things that clients often ask me, and some text me on days when there's a lot of market volatility, and ask me how things are selling and is it really busy, that kind of thing. I've noticed two main things is that when markets are rather quiescent, as Michael Pinto likes to say, that the sales are steady but not overwhelming. But then if silver drops precipitously, we get tons of calls from longtime stackers, people who've been accumulating for either weeks, months, years, decades. Those are the ones who call on those days when the metals go down. We get tons of calls, and then when the stock market goes down, or the metals go up, we get tons of calls from new silver investors, people who are investors. It's their first time to purchase metals, and they're calling when the stock market drops or when the metals go up. And I thought that was kind of interesting. Rick Rule has often talked about gold being the fear trade and silver being the greed trade. But I think that a lot of people are trying to be prudent, and they're trying to plan ahead, and they're trying to be aware and prepared. And they're using either gold or silver as part of their overall plan, their overall strategy. But I thought that was interesting that when metals go down or the stock market goes down or metals go up is when I see different kinds of callers coming in. I don't know if you've seen that in general.
I have, and that's always the way that it is. It's and maybe people are learning buying on the dips, but I'd like to add something to that. You know, we've lost a lot of people that would be buying gold. You could argue have put their money into crypto. They've done really well. But I'd like to point something out, and that is that when we see the market go down like we've seen lately, the S&P having its worst 16 days to start a year ever in history, what's the crypto market done? It's gone down commensurate, really. I mean, look at Bitcoin. It's halved from what it was a month and a half ago, 2 months ago. And that tells me that that there's a very incestuous relationship between the stock market or Wall Street and cryptos nowadays. You have so much financialization of cryptocurrencies through Wall Street-based firms that you will notice, I think, if we see problems on Wall Street, you'll see problems with crypto markets, and that will awaken a lot of people, I think, who understand in the periphery, yeah, you know, I see gold and silver, but I don't make any money on it. I'd rather buy Bitcoin and buy a new Ferrari. Okay, fine. They understand it, though. They may not want it. They may think it's a pet rock until they don't. And I think if you were to see substantial market weakness, the same thing is going to happen with crypto market because they're so tied together. You're seeing it right now. And I think that will awaken a whole new generation of people who understand the reasons to be outside the dollar, just have not really embraced what has been money for 5,000 years. They've gone to something else that's made a lot of people very, very wealthy. But I think that that's something to pay attention to, and that just like cryptocurrencies going way up took some demand away for precious metals, if we see a continued softness or correcting of this market in conjunction with the correcting of the stock market, and I think they will behave similarly, I think you'll see a exponential increase in demand in gold and silver from a whole subset of people that have made an awful lot of money and have a lot of money to burn. And I talk about, you know, how we accept cryptocurrencies for precious metals. We're not taking those cryptocurrencies. We're just using BitPay, which is a facility or a platform that converts those cryptocurrencies into cash and pays us. We don't take those cryptos and hold them. We use it as a means for people to transition out of cryptocurrencies into precious metals. And so I would just like to make that point that I do think there is a really, really close symbiotic relationship right now between cryptos and Wall Street. And if Wall Street takes it on the chin, I would say that there's an awful lot more softness in the crypto market, at least initially, to go along with it, which I think would add a lot of demand to this market.
I just realized it's 5 minutes to the end of the hour, and we haven't given you a chance to talk about the weekly special. A lot of people tune in for that, and they expect it in the first 20 minutes or so.
Yeah, you know, so again, it's really been increasingly difficult to find specials and to offer them at a price that, you know, we call special right now, that I would throw up on looking at it a couple of years ago. $8.45 over spot on 2022 Silver Eagles. Let me put that in perspective for a minute before you switch that, Elijah, to the next one. In 2019, had you bought Silver Eagles from me, November 2019, you would have paid 3.25 over spot. I would have bought them back for $2.60 over spot, something like that. 4 months later, you sell them back to me instead of, you know, immediately. I would have paid you $11 over the price of silver. Since that time, they've never come back down, and this might be as low as we've offered them, literally, in 2 years. And that price is $5, just over $5, over the highest I'd ever sold them for prior. But it is a special price, and the question is this what we could expect moving forward? I don't know how to answer that. I don't. But I will tell you at this price, it'll be as good of a price for any quantity as you'll find anywhere in the country. And so for people looking, going back to your very first question when we started, should you own something to barter with? Well, look how beautiful that coin is. It's the wow factor. You put one of those in someone's hand, give it as a gift for a birthday present or Christmas or whatever, or a ball marker. And people will say, whoa, that's so cool. It's just amazing. So I love them. I wish they were less expensive. I have a warehouse full of them because I have not pushed them. But as one of only 27 U.S. Mint authorized resellers, we have a lot of them. And they're in stock, ready to go. And this is the least expensive I sold them for in the last 2 years. The second one, Elijah, I think, is the Krugerrands, if I'm not mistaken. That's the 2022 as well from the South African Mint. Thank goodness for them, because what is over the last 2 years, the UK products and the Philharmonics, the Britannia and the Philharmonics have been, you know, mainstays. But because of the problems with those two mints, we haven't had any for the better part of the last month, really. Well, I should take that back. We had some, the last of those 2021s that we had, but not the new ones. So anyways, at $3.79 over spot, here again, for any quantity, I don't think you'll find a better price anywhere in the United States on those. And then we decided to get crazy. You know, people say to me, don't you ever offer any gold? Well, I love gold. And I think ultimately, based upon gold's role in the monetary system and the massive acquisition of gold, you know, I think the central banks bought more gold, right now hold more gold than they have in many years. It was a big year for gold acquisition. Ultimately, because of the way gold is classified as riskless, I think that's where we want to be. But the silver value play, it's the value proposition of a generation, guys. And I've had a hard time ignoring ignoring that. And so that's why we always offer silver. But I love the pre-33 gold coins. And they're done again. You asked me a question today, and you said, is it true that the $20 Liberty and the $20 St. Gaudens are both called the double eagle? And the answer is yes, it is. The $20 Liberty was minted from 1850 to 1907, and the sister coin, the St. Gaudens, which was named after Augustus St. Gaudens, a very famous sculptor from New York at the turn of the century. He designed that coin, and it's my favorite of them all. So we have some in circulated condition. Now, for people out there who don't know what AU and BU means, AU stands for almost uncirculated, and BU stands for brilliant uncirculated. Sorry, my eye is watering. BU stands for brilliant uncirculated. They're not certified, but they are in really beautiful condition. And at these prices, they are, from a historical perspective, you're talking 1 or 2% above a gold eagle, 3% above a gold eagle. That's well below where they've been priced most of my career. So someone's looking to buy gold, this is a true piece of Americana. This is the wow factor on steroids. So $20 St. Gaudens in AU and in BU while supplies last. We have I don't know, a few hundred anyway for sure. And someone looking to buy gold, this and the $20 Liberty, which Elijah will show you here in a second, really are fantastic. The $20 Liberty was minted from 1850 to 1907. And that's when Roosevelt commissioned Augustus St. Gaudens to design a coin that would more properly represent the American heritage. And that's why he designed the St. Gaudens. But truth be told, I think the $20 Liberty is the more, I don't know what I'm even trying to say. When I hold a $20 Liberty, it to me is more special. You're talking a coin that's a minimum of 115 years old. Yeah. And
it's the gold coinage that got us through the Civil War. It's the gold coinage from through the first centennial of our nation. It's remarkable.
Yes. And extra fine, XF stands for extra fine. Now this is going to be a circulated condition. So you're holding a coin from the 1880s or 70s or 1890s or right at the turn of the century, 1900 through 1907, that was in someone's pocket, most likely. And it's amazing when you think about that you're holding something that a banker or a shopkeeper or a person held in their drawer that represented a good portion of their savings. And now we can hold it, and it is just as awe-inspiring to me today, even in that condition, as it would have been back then. So I think that if you're looking to buy something in gold, this is really where you're striking a balance between content and potential and safety. The laws on confiscation say nothing about the condition that you buy. It just says coins minted prior to 1933 for collectors. And so having some St. Gaudens, having some $20 Liberties, allowing us to mix the dates up, going deeper into $10 Liberties and $5 Liberties, and you can go down the rabbit hole. But for someone looking to buy gold right now, the 20 Lib and the 20 Saint in these conditions are as good of a buy as you'll find, especially this one at 139. You're talking 1 or 2% over a Gold Eagle. It's really, really a good deal. And I know we didn't list these, but I want people to know that I have 500, 600, 700 certified $20 gold pieces in stock too, up through 65 grade. And we'll make sure that they're the best prices in the United States. So, it's time to also think about gold, even though silver is an amazing value, but these are special, and I wouldn't expect them to stick around too long. So looking to buy gold, this is where I would start.
Well, Andy, as always, we're just so grateful for your presence here. Viewers have been asking for this live chat opportunity, so we didn't run out of time, as we often do with asking you questions. So thanks for fielding all the questions. And
pleasure.
Everyone, make sure you keep your questions saved up for next week. We'll be back next Tuesday again with Andy you can submit questions ahead of time by emailing them to libertyandfinance@gmail.com if you'd like to. And otherwise, Andy, any final thoughts for our viewers before we wrap up the live stream?
My thought is this: it's time to buy gold and silver. And I have this feeling in the back of my mind that inflation is going to wipe us out. It's a gigantic tax, and I just don't see it going anywhere but down a road that will ultimately impoverish an entire generation. And I think the markets, or the Fed and the powers that be, are going to sacrifice the dollar, and they're going to let inflation run at the expense of the markets, because if the markets collapse, and stocks and bonds and real estate all inversely correlated to a rise in interest rates, it'll be holy hell. And that's when you go to the greatest depression of all time. And in a deflation, you can argue gold will perform best in a deflationary scenario. And that's what all this debt is. It's really deflationary. And it's going to entice, and I believe implore the Fed to continue to inflate. And I think if you don't own real things that can't be printed, away, you're going to get wiped out. And the if I'm wrong and they do fight inflation, the markets are going to collapse. And gold and silver are the only assets that carry no counterparty risk. They are not simultaneously someone else's liability. So whether it's inflation, which I believe, or it's deflation, if they really do get tough on inflation. Remember, Paul Volcker raised interest rates to 20% to fight inflation. And the only way that they can really get serious on fixing this problem is to raise rates above the federal funds rate. You're talking over 700 basis points. You'd have to raise interest rates above 7%. And it's good night, Irene, Katie bar the doors. It's going to get bad. So whichever way it plays out, you need to own some now. And so that's my thought. And I wish it was brighter, more bubblier, but I think it's time to get real. And there's a fine line between pessimism and realism. I think we're getting real close to crossing over that line. So anyways, I appreciate you letting me speak my 2 cents, and I appreciate being here with. I love these live streams. I'm happy to do it anytime, and I wish the both of you guys nothing but the best, and everyone out there as well. Hope you have a great night. Look forward to seeing you all again next Tuesday.
Yeah, thanks
Awesome.
to everyone in the live chat as well who joined in for this and submitted the questions. Couldn't do it without you.
Yeah, definitely. Thank you so much, Andy.
Always, Elijah. Thank you, my friend.
All right, everyone. Thanks for joining us for this weekly market update with Andy Schectman, CEO of Miles Franklin. Thanks, Elijah, for